No one in the retail world sold an ounce. Nobody did. And so that's the most important thing here, is that the demand retail for silver is off the charts.
Silver tends to overreact relative to gold.
Some say silver has bottomed out because of short-term pressures. And as we push towards electrification in vehicles and appliances, silver will play an important role in energy efficiency. And that could be the big boom for the commodity.
You know, when you see the price falling like we saw last week in silver, noticing that 61 million ounces of silver were covered by the commercial banks when they drove the price down. No one in the retail world sold an ounce. Nobody did. And so that's the most important thing here, is that the demand retail for silver is off the charts. We saw 300 million ounces taken off of COMEX last year. The numbers are higher than that already, at least in terms of where we project the year-end numbers to be off of COMEX this year. The physical demand is 9.5 out of every 10 orders we do have silver in them. I don't know how you could present a more bullish case from what's coming out of the ground to what's leaving COMEX to the supply-demand fundamentals to the bracketing of industrial demand on one side and monetary demand on another side. Silver, to me, really truly is the buying opportunity of a generation on just about every single metric, from the ground to the end user and everything in between. So yeah, silver is what the public is buying right now, and to a very small extent, gold, and to a minuscule extent, platinum and palladium.
The other aspect of the market internals that would be helpful is just the volume of orders that we're seeing. I know from I'll give you my little cheap seats as a individual broker working with individual clients, is that it got pretty quiet over the past week and a half before the price smackdown, and then it got a little bit more active when the price went down. But half of the calls we were getting was people asking, is it going to go down more? It's like, well, if we all knew that, we'd all be a lot more wealthy. But as soon as we started to see an uptick here coming out of the weekend, I mean, yesterday my phone was just melting, and it was difficult to even answer one phone call without having two more stack up behind it, because people are seeing that there's the coming out of a dip there. And I don't know, from a bigger picture standpoint, at a company level, if you've seen an uptick in volume. I talked to our operations guys, and they said yes, they are. But what are you seeing at a company level over this past several week period?
They always call it the summer doldrums, and especially over the July 4th holiday, the month of July is typically the quietest month in this industry. And you add into the mix people being shut down or locked down for so long, not being able to see family and friends the way they want, not being able to get out and travel or go to the cabin or do the things that they want to do. I think it was like being released from prison this summer, so to speak, in a metaphorical sort of way, and people just got out. And you have Europe on vacation, you have United States on vacation, you have more incentive to get out there and be with your friends and family and to feel the fresh air. And a lot of that is a little bit dramatized. I'm not trying to do that, but I think that in reality is what it is. July was a month where you got the middle of summer. You got a million reasons to not be sitting in front of your computer thinking about purchasing gold and silver. I think that when we see the price fall, there are a lot of people out there who have become wise to the way that the cartel suppresses the price. And so you see a lot of people jumping on the subsidized price as a form of value. So none of it is really very surprising whatsoever in terms of the slowness in the month of July and the dramatic uptick in demand after the price was orchestrated lower. That fits part and parcel with everything that we've ever seen before. And I think as we head towards the end of summer into Labor Day, there will be more and more reasons why people will want to pay closer attention to what is happening. But this up and down type of action is one of the reasons we talk about getting on a plan and cost averaging and buying on a monthly plan or a semi-monthly plan whenever you can. That cost averaging will smooth out the uncertainty curve. But indeed, right now, I think that we shouldn't be surprised that we saw a slowdown, and quite to the contrary, as it's moving back up. When they knock it down in the middle of the night by $2 an ounce, and there's not anyone selling an ounce, and the commercial banks are covering short positions, and take a step back and look at that for what it is. It couldn't be a more bullish environment where they have to fire a bazooka at the market when everyone is sleeping to drive it down, but the minute it hits, bam, they cover it and it pops right back up. This is the important takeaway here, is the biggest money in the world is not selling. And as we talked about last week, if you look at the number of ounces held in the mutual funds, in the ETFs, and all of the COMEX depositories over the last couple of months, as sentiment has slowly gone down, as the price has been engineered down, no one is selling an ounce. In fact, those inventories are going higher and higher and higher, meaning that the manipulation is having lesser and lesser and lesser of an effect. And certainly it already has in this industry with nobody selling. Yes, it's a little bit quieter, but no one has been selling anything in an environment where the price hasn't been, at least intuitively, moving in the direction that we would assume it would with all the craziness around us.
We had an interesting interview last night with John Williams from shadowstats.com talking about the role that he has observed, and he comes to things through data. He looks at the data and he looks at the data and he looks at the data, and he tries not to apply a narrative to it. He just tries to not spin it or apply any of the moving the goalpost tricks that the official headline numbers are subject to. And he said it emerged from his data the indication that gold is a leading indicator of inflation, and that it will tell you ahead of time when the inflation of the currency supply is going to happen. And I said, well, what about this environment where you have government authorities and central banks where you're not seeing, for the last decade or whatever, that being allowed to happen? And his comment was thought-provoking. He said, yeah, those kind of regimes don't tend to last long. So it's like, So he sees that you can only fool Mother Nature so long.
I think that's really astute. First of all, I would like to say that I find John Williams to be a must listen to, must read, must watch. I think that one of the things that I find most attractive about what he says is that, like you said, he's just about the numbers and the data, the way that they were calculated up till 1980. And post-1980, they were all manipulated to meet an inflationary agenda that the U.S. was embarking upon. I do like that what he says about the manipulation, that those administrations don't last very long.